Hi, I'm Mike Klijanowicz. I'm from Cummings & Company Realtors, Associate Broker. Today, I'm here interviewing John Wald with Main Street Home Loans. We got some good questions we're going to ask him today about, just different situations that people find themselves in, unique situations sometimes where they want to buy another house, but they might not have the cash and they got to free up some equity and stuff. So we're going to be talking about like a bridge loan type product that he has, go over some of the specifics so you get some more details about it, so you can really take this information and then you can use it yourself, or feel free to like and share this and share it with some friends and family that you might know that might be in this type of situation. So basically the picture we're painting here is, you own a house, you want to buy another one, but you don't have cash, but you got a lot of equity in your house like everybody does today. So what we need to do is we need to utilize the equity and then use that to get in the next house and try to avoid you being what we call contingent, where you have to be contingent on your home selling. So, I was talking to John about this over lunch a couple weeks ago, and he's like, yeah, man, we got this awesome program. And I'm like, well, we need to do a video about this because people need to know about this. So why don't you tell me a little bit about what you got, how it works?
Yeah.
I'll ask you some questions if I think there's any.
So Mike, you just said a great point, right? A lot of people have a ton of equity tied up in their homes because, if you bought in, any time in 2020 or even before, home values have gone up, right? And unfortunately, so has inflation and prices of everything. So people are tighter on cash, but equity rich. And in your market as a realtor, if you are writing a contingent offer, it's not going to have as much power if you're in a competitive situation. So we have a bunch of different products, a bunch of different bridge loans. And a bridge loan, just think about it, is literally a bridge. It's going from this house to this house, and we're giving you that little boost to get to this house. We have 4 different types of bridge loans, but one that I want to talk to you about today is what's called our Equity Advance Bridge Loan, which is phenomenal. I've helped probably 25 people just in the last year utilize this program. It's awesome. So let's pretend you have $200,000 worth of equity in your home, and
which is very real. I mean, people
absolutely.
do. Values have gone up tremendously.
Yep. So it's not unreasonable to think you have that, which is where they just reach out to you, say, hey, what do you think my house is worth?
Right.
Hey, you got a bunch of equity, and I want to move to a new house because I'm busting at the seams with my kids, right? So an equity advance bridge loan allows us to tap into that equity of that home, pull that money out, and use it on the next home. Now, this is a standard bridge loan, but this bridge loan, our equity advance, is that much better because what happens is a normal bridge loan, you have to count the payment on your existing house. You have to count the payment on the bridge loan, and then we have to count the payment on the new house.
Oh, wow. Yeah.
Right? So now, all of a sudden, you have to qualify for 3 mortgage payments, right? Most people can't qualify for 3 mortgage payments.
Right.
What we do with our Equity Advance Bridge Loan is we omit the existing mortgage payment and the bridge loan mortgage payment. So you don't have that payment. We actually have it so that we pay your mortgage payment for 6 months.
Wow, 6 months?
6 months.
Wow.
So you have 6 months
so
to
even if the
sell
market
this
changes
new house.
a little bit, we still got some time.
You got 6 months.
That's a lot of time.
It's awesome. So we have the ability to avoid having a mortgage payment on your departure residence. You tap into the equity and you use that as a down payment on the new house.
Sweet.
I just helped a client on Monday, actually. We helped her. She owned a house in North Carolina. She had a bunch of equity in her existing home, and she wanted to buy a new house. Right? I said, let's tap into the equity using the Equity Advance Bridge Loan. We paid off her North Carolina house. She had a very small mortgage, maybe $40,000. We paid off her North Carolina property completely free and clear, and then we used 15%. Well, then we used the leftover money to put down 15% on the new house.
Wow.
She's going to then move out of her house, declutter, and then her agent's going to list her house,
stage it, make it perfect,
and potentially
all that.
get more money.
Right.
So it gives you, like, if you got kids and dogs and everything, and your house is cluttered, well, guess what? The bridge loan allows you to get out of that house, get into the new house, work with you, work with your stagers, work with your contractors,
everybody,
clean it up, organize it,
I got them to help you out, right?
Yeah.
I mean, I can do all that, and this isn't just for people who are looking to upgrade. This is for some older folks
Yep.
who are sitting in a house that's paid off.
Correct.
And they want to, downsize.
Yep.
And they don't want to tap into their 401k and all their retirement money and all that. They want to leave it alone, especially with all the volatility going on right now in the market. You don't want to touch anything right now. Leave it. Because this is going up, it's coming down. Nobody knows what's going on. No. So it's like, I don't, just keep it where it's at and let it ride. But, but if you want to tap in, you're older folks and you're like, I want to move to the 55 plus community. I really don't want to do something like Oakcrest or retirement home. Like that's for old people. Like I'm still active. I'm still vibrant, you want
to get a rancher.
Like 70 is the new 50, you want to take advantage of the equity you have. This is perfect, man. This is perfect.
It's phenomenal, and we've helped a lot of people with it. What's also cool is, let's pretend I did this with another agent. They had a ton of equity in the home. We allowed them to buy the new house. The house that they were selling needed a lot of repairs. So with the equity advance bridge loan, rather than putting down an extra $35,000, that client took $35,000 and we allow you to do up to $35,000 of repairs on your existing home to get it listed. So
that's great. And I have contractors too, just in case they don't have, they needed more than 35. I have contractors that would actually let them float the rehab costs and pay it when they close. So, that way they can upfront them the money, do the repairs. So if you want to upgrade your bathroom, upgrade your kitchen, upgrade your flooring, upgrade the paint, make the house as you want, top dollar, I mean, if you're going to take 25 grand or 30 grand and put it into the house and you can get 80 out of it, then it's a no-brainer. Do it, but and again, that's for older people too. They've been in a house for 25 years. It needs a makeover, and I have contractors that aren't going to charge you $500,000 to redo your bathroom. So, these are people you're not going to find in the phone book. This is why you go with the agent who's connected, that knows people that can get things done. So it's so important to have a good team, not only just 100%. On the finance side, but on the real estate side, and everybody's kind of working together for the common goal, which is to help you, get into what you want, whether it's downsizing, whether it's upsizing, whether it's new construction too, I mean, we have all kinds of stuff out there that you could look at. I mean, builders would love to have this option, and I mean, builders who are watching need to pay attention to this too, and say, maybe I should call John, and maybe I should get John on my preferred builder list, because we can help some of these people in the community move into our community, who are kind of have the equity but they're strapped. This is an option for builders, big builders, maybe not do the in-house lending because they can't do this stuff. Maybe say, hey, maybe we need an option, So, lots of different options. Now let's just play devil's advocate here. Let's just find out what happens, because, worst case, the market shifts and, we can't sell the house in 6 months. Then what happens after 6 months?
So we have a contract on the house that we will buy the home for set value before. So basically what happens is we agree on a set value price. So you essentially have a purchase contract.
So it's kind of like a guaranteed sale.
You have a guaranteed sale. Right. Exactly. So we have a purchase contract on your house saying that we're going to buy it for, let's just say, 80% of what it's actually worth.
Right.
Okay?
So that's your safety net.
That's our safety net to do the loan. But you, as an agent, right, are going to market the house and sell it. Now, let's say that we have it for 80% of the price. But all of a sudden, Mike says, hey, if you put $20,000 into this house, instead of listing it for $400,000, we could list it for $425,000. Whatever, you guys could sell the house for whatever you want. And you have 6 months from the day of closing on the new house to sell the existing home.
Gotcha.
You also don't have 6 months of mortgage payments on that house. And in addition to that, on the new home, there's not an adjustment to the interest rate. It's all the same terms, all the same rates. It is the product for today. Because everybody is equity heavy and cash tight.
And they're tight in their house. Because they want to hold on to a 3% interest rate that we're probably never going to see again.
Correct.
And that's fine. You can sit and wait for 3%, but it's not coming back. I'm waiting for it, but it's not coming back. So I'm just paying my licks on my arm that I got, and I'm just dealing with what I got. But I'm still well under what they are today. So even doing an arm wasn't risky for me. It is what it is. But there's programs out there. There's so much stuff out there. don't just go and start looking at houses
Yep.
and making a mistake and finding something you fall in love with and just doing it the wrong way because you put the cart before the horse. Let's work on getting the plan together first. Have me come over to the house, evaluate what you have, figure out how much money you're looking at actually walking away with when all's said and done. Then we can bring John into the equation. We can talk about how much equity we got. What can we get approved for? What's our debt to income ratios? Do we need to pay a car off? Do we need to do something else? Pay credit cards down, whatever, and have a plan in place. So even if, it's never too early. This is the thing people don't understand. It's never too early to start this process. You can start this process, a year before you're ready, 6 months before you're ready. The earlier you actually start planning, the better it can actually happen for you. So, that's something to think about. I really appreciate John taking time today to, and sit down with us and go over this program. And I really am hoping to get this word out to everybody, young people, old people, new construction, builders, everybody. They all need to know about what type of program John has. So I'm grateful for him, and I can't wait to be getting him some more business for this too. So, and working together.
Thank you.
All right, man.
Yep.
Thanks.
Thank you.
See you, man.